I'm Charlotte McLeod with the Investing News Network, and here today with me, I have Gwen Preston of Resource Maven and Peter Krauth of Silver Stock Investor and Gold Resource Investor. Thank you so much for joining me online today once again.
Our pleasure.
Yeah, really excited to have you both here. And to start off, I want to get a quick recap of 2021 from you both because it's been an interesting year. We spoke around this time last year as well. And at the time, there was quite a bit of optimism, I think, about the precious metals outlook. So starting off with Gwen, I want to ask if 2021 went as you thought it would go. And if not, when did you start to see that things might be going in a different direction?
Oh, if only it had gone the way that we wanted it to go. It was definitely a slog of a year in a lot of ways for the precious metals. I mean, I say that gold actually held its ground and is very well priced, right? Gold at $1,800 that's a very good price for gold. And gold mining companies are making tons of money and paying out strong dividends and buying back their shares. So they are doing very well. So $1,800 gold is a good level. Now, as gold investors, of course, we always want more. We're greedy. I mean, investors in general. And that isn't really what we got. And what were the reasons? I mean, they were all kinds, right? First of all, when we spoke at this time last year, we were coming off of an exuberant moment in the gold space where gold had gotten up to an all-time high above $2,000. And that was just sort of in August. And I think we were all, the exuberance of a moment like that can sort of carry you through, stay with you maybe longer than it should, because every jump, always has a step back. That's the nature of, and if you go back, in a long-term gold chart, it just keeps going higher, but there's always going to be step backs within that, like whatever time frame you sort of look at it. And so there was definitely a step back from that. And I mean, everything played into that. A huge part of that was just the broad stock markets, right? We remained in a highly accommodative environment in terms of the central banks, interest rates being very low, lots of support being given directly to the economy and through monetary means. And so the stock markets have gone wild, right? And it's within that context, it's harder for gold to stand out. And even for gold miners who are making oodles of money to stand out, because you have, a joke of a joke, which is the Shiba Inu coin as a joke on the Doji coin, like going through the roof. And so that's where speculative interest has gone. That's where a lot of the money in the stock market has gone, is just to general stocks, as opposed to gold, which is fundamentally a hedge, right? It's a hedge against inflation. It's a hedge against uncertainty. It's a hedge against a lot of things. And ironically, even though we're still in a pandemic and we are in very uncharted waters in lots of ways, there hasn't been that much need, at least up in our face, for a hedge. And so gold has just sort of trotted along sideways. The unfortunate thing for gold stocks is that when the gold price just trots along sideways, investors get a little bored and they sort of drift away from gold stocks. So gold stocks haven't done very well because the gold price has just been a stable thing through the year. So it was a progression, and that progression is going to continue. I mean, I remain reasonably optimistic for gold going forward, but that was a question about what happened. So those are my thoughts on that.
Okay, that's great. And let's move over to Peter. Let's ask you the same question looking back at 2021. Are there any surprises or perhaps highlights that you would mention looking back on the year?
Well, absolutely, yes. So I think the biggest highlight is going to be the late January silver squeeze that really took a lot of people by surprise. And, although like gold, silver has kind of meandered through the year and moved mostly sideways, it's down a little bit if you look sort of on the last 12 months. It's really actually been quite stable, very much how gold has. I mean, if you look back, gold over the last, say, sort of 2.5, 3 years, it's up, I think, about 50% from mid 2018. Silver is similar in terms of its gains from, I think, about mid 2018. So if you've held either of these metals for the last 3 years, you really can't complain. But a lot of people will come into these markets when they see big moves and then be disappointed that it doesn't continue. And so we're here to tell people about how these markets develop and how they progress, and to be patient, because the moves can come sometimes in big waves. And I certainly believe, because in both cases, gold and silver were in secular bull markets, that these moves will come. These metals and their stocks will move up in big ways and then consolidate sideways for a while. As we've seen in gold and silver, it's been about a year and a half at this point. It could continue for a little while longer. But when the next move comes, I certainly expect it's going to be a big move, and it's going to be to the upside. And if we sort of step back again to that first point about the silver squeeze, yes, it was unexpected. It was sudden. It was big. And I mean, I told subscribers at the time, don't expect this move to be a sustained move in either the price of silver or in the stocks, because it wasn't a fundamental shift. It was a sentiment shift. But the nice thing of it, I think the big takeaway is that because it was through Reddit, because it was something that was a social and social media kind of event, it introduced silver and silver stocks to a whole new generation of investors. And an interesting point about this younger generation is that I heard a statistic just a few days ago that about 70% of, I think it's a Generation Z, who sort of stand to inherit from their parents in the next, say, decade or a few decades. Most of them have the intention of not keeping their existing or their parents' investment advisor. They plan to manage this money on their own. So they will turn to a lot of social media and online content to feed that need for information. And I think these are some big takeaways from 2021.
Okay, great. That gives us a pretty good look back at what happened this past year. And now we're going to look forward to 2022. We're going to split it and hear from Gwen about gold, and then Peter about silver. So starting off with gold, Gwen, I want to ask what the main factors that you're going to be looking at in 2022. I know that most of the time that we speak, you mentioned real rates, and I can only imagine that those are getting more important as we hear more about inflation. So where are we at now with real rates and gold? And is that still kind of the most key thing?
Yeah, so a timely question, because we just had a meeting of the Federal Reserve yesterday, and they laid out a new dot plot, which is how quickly they expect to raise interest rates. Of course, they have to lay out a plan to raise interest rates because inflation is at 6.8%. You can't not do something about that. The thing is and so they now they say the median voice on the committee says 3 25 basis point hikes in 2022, 3 again in 2023. Is that actually going to happen? I'm not so sure. They specifically dropped the word transitory from describing inflation, but then Powell leaned hard into saying that they still believe that inflation is related to the pandemic and the reopening of the economy, which are passing things. Which is to say that they still believe that inflation is transitory. They just dropped that word because it got a little bit confusing to the markets. The markets wanted that to mean that inflation was only going to last a few months, and it ended up lasting longer. So I do think that Powell and his team still think that inflation is somewhat transitory, and that supply chain issues will ease, and that the inflation will come back down. And so that will be one of the paths that determines how quickly rates go up. The other path that will really impact rates is employment. And of course, that's the Fed's dual mandate, right? Is to manage inflation and employment. And he also took pains to underline how closely they are watching that. And I think within that, we're still not bad. Our labor force participation rates are still somewhat low. So that's certainly a pandemic result for all kinds of different reasons. But I think wage inflation is probably the thing that they're going to be watching the most. Wage inflation is the stickiest kind of inflation. If people get paid more, then there is just more money in the economy. And so that's what makes inflation stick. So going forward, I will really be watching wage inflation. I mean, overall inflation and wage inflation together to get a sense of where the Fed will end up going, whether they will truly follow through on all these rate hikes or not. From a gold angle, yes, we want real rates to stay negative. And should inflation persist anywhere near current rates, then we can more than handle 6 25 basis point hikes. Like, that's easy peasy. Now, I don't think inflation is going to stay at 6.8%, but even if inflation stays at 4%, we can handle rates going up to 2%. That keeps us in negative territory. Sure, we prefer them real rates to be declining, but still, I think the other thing to consider, though, is that while the Fed doesn't talk about the stock market, the Fed pays a huge amount of attention to the stock market. And I think Jerome Powell and his friends are terrified of making the stock market roll over. That's where a lot of the wealth has been created. That's where a lot of the confidence in the US economy sits. It's where it lives. And they're terrified of rolling that over. And I think that that's really important, because I think that any kind of tantrum that traders and investors throw about rate hikes would manifest as the stock market tipping over. And that could well change the path of rate hikes, because they've done it before. When we were recovering from the great financial crisis, the Fed was marching interest rates up very slowly, and then they tapered the bond market. They did it the other way around. They did rates and then tapering. And that's when we had taper tantrum. That's when the market was like, I can't handle that much tightening. Meh. And then Powell backtracked and started cutting rates. Well, this time they did it the other way around. They tapered the bond buying, and now they're trying to layer rates hikes on top. I think it's reasonably likely that the market has some rate rage. We had taper tantrum. I think now we're going to have rate rage, and they're going to say, don't tighten. I want the stock market to go up forever. And the stock market may well roll over on after a few hikes. Like, they won't accommodate, they won't stand for that many hikes. So I think there's a bunch of different factors playing into whether this new rate hike plan, this new dot plot actually comes into being. I think gold can do well in a negative real rate, and should do well in a negative real rate environment, whether it stays stable where it is, whether it goes up. And it kind of falls back on the everything hedge role that gold plays, right? I just listed a whole bunch of things that we don't know how they're going to play out. That's the definition of uncertainty. We just talked about inflation, and it's a hedge against inflation. There's all kinds of things that gold can be a hedge against. I think that's the role that it will play in the coming year. And since I don't have a crystal ball and I don't know how these things will actually play out over 2022, I don't know whether gold will make a dramatic move, whether it will make a series of small moves and step back and essentially stay flat. I think it will remain well supported as a baseline, and there's potential for excitement on top of that, but it really depends how much the role of an everything hedge comes to the fore.
Okay, yeah, there's certainly so many factors at play, and I don't envy you trying to think about what's going to be coming forward. Going to take it over to Peter and hear about silver. We've kind of heard about some of the factors that were affecting gold in 2021 and what may be coming up in 2022. Do you think that those same things are affecting silver, or will be affecting silver, or do we have other things at play in there? Because I know it's got a little bit more of an industrial side and other things at play. So let's hear about silver in 2022.
Sure. So actually, yes, it does have a lot of the same drivers. In fact, a quick note, I'm actually working on a bookend that I plan to launch in early 2022 called A Great Silver Bull. And so in researching the book, I compared how silver behaves to real interest rates with how gold behaves against real interest rates, and the behavior is almost identical. So it's not quite the same tracking that gold has, but it's very, very close. And so on that note, silver certainly reacts very much to negative real interest rates. So that's something that I'm watching closely. And like Gwen says, if they stay negative and if they trend downwards, then certainly that's very bullish for silver. And as a follow-on to what Gwen was saying about how we're not sure if the market will tolerate much in terms of rate hikes, based on today's reaction, today being Thursday, December 16th. Gold is up, silver is up, and I think that means, to me at least, that the market doesn't buy that the Fed will necessarily get away with those rate hikes, or at least, doesn't believe that intention really is as powerful as they would maybe like us to believe. And if you look at, they've been talking about tapering. They had started tapering in November. The last stat I saw was that the Fed's balance sheet was actually up 20% over the past year. So they talk about tapering and about tapering this particular bond buying program. But what does it really mean in terms of their overall strategy of bond buying? Is there other bond buying that goes on that they don't talk about or don't plan to taper? So if you see their balance sheet continue to grow when they're supposed to be tapering, then there are other things going on. And so if I see it, the market sees it. And I think that's why we have the reaction that we saw today. And so to your point about other drivers for silver, definitely, silver is partially an industrial metal. Industrial uses represent half of silver demand. And so for 2021, we kind of expect that overall demand will be up about 15%, which is huge for silver. Industrial demand at least will be up 8% over last year, and that physical investment will be up 32%. Here I'm quoting numbers from the Silver Institute. And so, that's quite impressive. We know obviously that, and we've heard this multiple times about how post-COVID, there's a new paradigm in terms of electrification and green energy. These are real things. I mean, photovoltaic, which is solar power, that represents about 10 or 11% of all silver demand every year. That's going up in terms of demand. So and there are forecasts, as I say, for demand from photovoltaics, from other industries, EVs use about twice as much silver as regular internal combustion engine vehicles. And then you've got high-tech telecom, 5G networks, you've got medicine. Silver is very much an antimicrobial agent. And so all of these things are driving silver. I don't see any of these things going away. And if we go back for a moment again to physical demand is expected to be up, as I said, 32% over last year. And ETFs now hold as much as an entire year's supply of silver. So physical ETFs, silver ETFs hold over 1 billion ounces of silver. And the entire 1 year supply of silver is 1 billion ounces. So none of these things look like they're backing off. There are multiple drivers, both from the monetary side, from the industrial side. Silver looks like it's going to be moving higher next year, certainly from all of the angles that I see.
Right. And maybe we can talk a little bit more specifically about the price. I know you have a pretty positive long-term outlook. And I think I remember that you were thinking that it would go over $30 per ounce in this year, which we didn't see. So what does the price outlook look like for 2022?
If these things line up kind of the way I see them lining up right now, the range that silver's been in this year is somewhere around between 22 and 28. I think it's going to push that upper bound at the very least next year. I think the fundamentals and the sentiment is falling into place for that. And I think there's also are pretty good odds that it'll actually challenge last year's high, which was close to $30. I think somewhere around $29.60 or $29.70. I think we can easily challenge that again in 2022.
Okay, and let's now move on to talking a little bit about the gold and silver stocks. Let's move back to Gwen with a gold question. So you mentioned that maybe this year hasn't been the best year for the gold stocks. Looking forward to 2022, where are you seeing opportunity among the companies?
Interesting question. So one, if we approach, the more I talk to investors, I talk to investors all the time, I sort of increasingly get reflected a bit of that perspective that I just outlined, which is rather than buying into gold because it's going to make some dramatic move upward, that gold investors are a little bit more leaning into buying gold for its everything hedge factor, for its long-term investment, for its hedging the rest of your portfolio, its diversification, and all of those things. Those kinds of investors are not likely to buy pre-discovery explorers. So the more money that comes into the gold space from that kind of hedge diversification security angle, and this has always been the case, but I think that those kinds of investors have always bought more advanced assets or producing operators or royalty companies, right? The bigger, more established entities. And I think that move will continue. I think that flow will continue. Again, maybe not in sudden surges, but I think that that flow will continue as this need for hedging just becomes increasing, just, continues to be in our face every day with the weirdness that is the world. That said, there remains, a great market of people who know the value that is revealed when a company drills into a discovery. So that group of people will continue to buy the pre-discovery explorers, the exciting, splash opportunity explorers out there. That the kind of upside that a gold discovery offers, or a silver discovery or copper discovery, whatever it might be, it used to be really stand out in the market. It was the kind of thing that only a successful drug trial or, other particularly splashy things could produce. Like I said at the beginning, now, as it turns out, in our new weird reality, there's a whole bunch of other things that also return multiples, like weird cryptos. And I don't mean to demean cryptos, but I'm just saying that there's more competition to attract speculative investors. And so that end of the market absolutely still works. And we know that there's enough interest in the gold space that a dramatic discovery gets attention. I mean, the Great Bear Resources buyout that we just saw is, of course, a standout example. That will be a standout for decades. But, that thing went from 30 cents in 2017 through a pretty grinding sideways market. Yes, the gold price has gained for sure. But really, it was the standout nature of that discovery that took that stock from 30 cents to $30. That kind of thing happens, 100 bagger, that happens in the gold space. And so there's definitely still a good group of people who understand that space and who will buy into discoveries. And thankfully, there's enough of those people and there's enough money interested in that space that those explorers are still being funded. There's still a lot of work going on. I have a dozen or more companies in my portfolio where I'm like, okay, let's see the next drill result, because who knows what might happen. So I think there's opportunity across the spectrum. I really do. It just sort of depends on each individual investor, what kind of risk they want to take on and what kind of involvement they want to have with their gold stocks.
Right. I think you're always so great at reminding us that you have to keep your goals in mind and decide what level of risk you want to go in on. So Peter, let's talk about the silver stocks. Are you also seeing opportunities across the spectrum there? And maybe an interesting thing to look at here would be, silver is often produced as a byproduct or found as, a secondary metal in different types of deposits. So when you're looking at silver companies, are you looking for pure play silver, or do you ever consider a company with silver as a smaller amount?
Yeah, so that is actually a great question. There are very few primary silver producers, and so that limits the pool from which you can research and make recommendations. So really, I do try and stick to producers that have at least, well, I'm going to say close to 50% or more, which is rare, but at least close to 50% revenues from silver production. And if they are silver explorers or developers, then the asset, ideally, or the flagship asset, will have at least 50% silver content in terms of the value of the deposit. And so, yes, it's a small pool, relatively small pool, especially for producers. But I feel that unless the company is actually close to 50%, because the limitations are there, then you're really not looking at a silver producer. You're looking at a gold or a base metals producer that happens to have some silver production. That being said, at least the companies that are producing, whether it's base metals or gold, because we're in such a powerful, I believe anyways, a powerful secular bull market for commodities in general, I think that we're going to see all of these metals be lifted. So it's fine that, you know, let's say a base metals producer that has zinc and lead or copper as their primary metal and happens to produce some silver, maybe as much as 20 or even 30%, is not a primary silver producer, but the demand for their metals is going to encourage them to produce more copper, lead, zinc, or even gold. And in that case, they're going to accidentally almost produce more silver. Will they produce more silver because the price is higher? No, it doesn't represent enough of their revenue for them to try. And even if they try, it's not easy to ramp up a mine. We know that everything between finding sufficient economic ore, between things like, permitting, expanding, financing, all of these things are big challenges. So I like to say that basically the silver supply is inelastic to the price. If demand ramps up and that pushes the silver price up, it's very hard for producers to react and start producing more. They just accept the higher price for silver, and that kind of feeds on itself and actually helps to push the silver price even higher. So there are limited opportunities, actually somewhat limited opportunities when it comes to silver producers. There is a bigger field or a bigger pool of silver developers and explorers. And so the portfolio actually in silver stock investor tends to reflect that. There's a bigger weighting, or at least there's a bigger range of silver developers and explorers, because they, you just have a larger range of companies to research and choose from when it comes to trying to, at least, as I say, aim for close to or above 50% in terms of deposit or production.
Okay, yeah, those are some great points. And I think we've all discussed this multi-commodity bull market idea before, and this is a good example of that in action. I'm going to take us over to wrapping up this conversation. If there's one thing we've learned, I think, from talking together today, it's that 2022, there will definitely be uncertainty. So to finish up, I'm going to start with Gwen, but the same question will be for both of you. What advice would you give investors heading into 2022? Is there anything that they can maybe know to do with some degree of certainty?
That's a big one. I mean, I've spoken to it a few times already in this conversation, but I really think that there's a lot unknown ahead. The reaction to the recent Fed meeting suggests that the market thinks that the Fed can time its rate hikes perfectly and manage inflation perfectly and keep the stock market elevated and, keep the employment numbers growing and do it all perfectly. And that would be great, except the odds of success with perfect execution are not super high, especially because I do think that the markets have become very used to being quite liberally supported, with, Fed buying lots of bonds and keeping interest rates really low. So I think that it is important to be aware that there's risk out there, that there's uncertainty and that there's risk, and to just do something about that. Do you buy puts on the S&P so that you have some downside protection? Do you buy gold and silver as your everything hedge? Just, I think, be aware of that possibility. If you're doing really well in the broad markets and in cryptos, that's great. Like, congratulations, that's fantastic. Peter's point that he brought up earlier, that sort of the Gen Z don't think that they'll use financial advisors to invest family wealth. I mean, that is terrifying for me to hear, like terrifying, because a lot of those investors have seen a strange stock market that has truly only gone higher, and that will end at some point. I don't know when that will end. I don't know. Is it next year? Is it 5 years from now? I don't know. But it will end, and I don't want people to have everything wiped out because they assumed that everything just always goes higher and all you have to do is buy index funds or whatever it is. So I would emphasize insurance, hedging, whatever it is, however that works for you as an investor. I think that that's important to keep in mind, because we are in uncharted waters, and perfect execution is very difficult. And yeah, let's just see what happens.
Okay, and Peter, over to you. In these very uncertain times, is there anything investors can know for certain, or do you have any advice for navigating these times that we're in right now?
What my crystal ball is telling me is that we should expect volatility. That's almost a certainty. And so if it sounds almost silly perhaps, but if you expect volatility, you may not like it, you may not even believe it's coming, but if you expect it to come and if you prepare for it, it will shock you less. And so you will sit through these more perhaps difficult periods, drawdowns. If we talk about precious metals, for example, we know that they go through, they can go through some wild periods. If you know that volatility is coming, then you're more likely to deal with it well. So, that being said, gold and silver are great hedges. They have been for centuries, millennia. And actually, in working on the book, another little bit of research that I did was to go back and see, since the Fed was established, how gold and silver had performed. Well, in 1913, silver was 60 cents an ounce. Gold was $20.67 an ounce. And if you do the math for compound annual growth in their prices based on today's prices, silver has actually compounded at, I believe it's 3.88% per year in 108 years. Gold is compounded at 4.22% per year over 108 years. Now, obviously, there's been a lot of up and down during that time. But if you had to give someone $1 back in 1913, or give them, the equivalent in gold or silver in 1913, and have to be able to open a box today and take that item out, I'd much rather have the silver or gold than have the dollar, because the dollar is going to be worth a few cents. The gold and silver have compounded at those rates that I just quoted. So you're way ahead. There's no question about it. And so, I like to tell people too that, maybe something for a little bit of an older investor, that if they have at least a little bit of physical silver and gold, the day will come where if you're more invested in this space, the day will definitely come when we're going to reach some kind of a wild peak. We've seen it before. It will come again. It's going to make a lot of people very happy, and it's going to make a lot of people very sad, probably, if they're not involved. But if you hold at least a little bit of physical silver and gold, you're probably going to want to sell a good chunk of that, but keeping a little bit is always probably a good idea. And at the very least, you can pass it on to your grandchildren, perhaps, and they can benefit from it. And like I say, what we've seen over the last 108 years certainly proves that case.
Okay, well, I think we'll wrap up there for this time around. Thank you both for coming on to talk and sharing your thoughts on what's coming up next.
Thanks for having me.
Pleasure. Thank you.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Gwen Preston and Peter Krauth.